Hey everyone, welcome back. So in this video, I'm going to be going over the story behind price, right? So whenever you take a trade, you want to get good at reading the story of the buyers and sellers whenever you take a trade, right? So the story of the market is very simple. You need to have a key level to enter from. You need to understand the main characters of your story, and you need to understand the moral of the story, right? What is going on inside of your key levels for you to take a short, right? So I trade the S&P 500 futures, or the ES futures, and this week of January, so up until the 16th of January, has been bearish, right? So if you were reading the story correctly, you should agree that most of the trades were plain sailing shorts, right? It's as simple as that. And I want to break down how I took this short, and I'm going to be breaking down in terms of the questions that I get, right? I get a lot of questions. So I just want to break it down, and I want to be super transparent with how I do this, right? I'm not holding anything back. This is my entire strategy from A to Z. And it's a very simple strategy, right? The market is telling you a story. Your job is to read that story, right? Can you read that story? And the story has three parts. You need to have a key level. You need to understand what is happening inside the key level. So what are the main characters actually screaming? And what is the moral of the story, right? Those are the only three things that you need, right? So I just want to break this down from a very sort of a zoomed out perspective. So on the ES futures, we've had obviously bullish market structure in the 15-minute time frame. We have a structural high, structural low, and then we have our structural high. So what's interesting over here is when we look at the 15-minute market structure, right? This is our structural low. This is our structural high. So what we can see here is we're above this 50% area. We are in a premium. Now, when we're in a premium, what does that mean? Well, it means we want to be shorting off one of our key levels, right? So the next question is, how do I find my key levels? So on Friday, the 16th of January, the short that I took was from around 69.84 down to about 69.82. So 20 points. The best short of the year, in my opinion, right? So I'm going to be breaking down how I caught this short. Now, before I do that, I just want to take traders to the side, and I want you to understand the story of the market, right? This is the new narrative for 2026. I want every trader to buy into. Now, the market is telling you a story. Your ability to win a trade comes down to how well you can read that story, right? So the story that the story that the market paints, right? This is the story, right? This is how the story works. The story has three main assets, right? Or three main things that you want to focus on. You want to know, where does the story begin, right? That's the first thing. You got to set the scene. You have to know where the story begins, right? The second thing is the main characters, right? The main characters are very, very important. I'm just going to write chart. This is the main characters of your story. And the final thing you want to also focus on is the moral of the story, right? So these are the three things that you need to focus on. Where does the story begin? What are the main characters actually doing? And what is the moral of the story, right? That is the story arc that every single trade in 2026 that you take and I take should follow. Now, if we go a level deeper, if we peel a level deeper, what does the beginning of the story look like? So when you're looking for a trade, you need to have a key level. So the key level is very important. And I often say to traders, no level, no trade, right? No level, no trade. That is the first thing. So I'm just going to write that here. No level means no trade. Right? So if you took a trade and it loses, there's a very good chance that your level was just not right. Right? It's plain and simple. Now, the next thing you want to focus on is the main characters of that story. Right? So the main characters of that story, in this case, we have buyers and sellers, right? And more on that in a bit. Buyers and sellers, you can see via the footprint charts, right? These are the footprint charts over here. You need to be able to read the buyers and the sellers when you make any kind of trade decision, right? And the last thing is the moral of the story. Now, the good thing with trading is that there's only ever two morals of the story, right? The moral can be for higher prices. What was the market doing at your key level? Was the moral of the story for higher prices or lower prices, right? And then lower prices, right? As simple as that. These are the three things every trade needs to tick, right? Every trade needs to take where it begins, what the main characters are doing, and what is the moral of the story. Three things. Let's dive into it. right? So I'm just going to clear my screen. So I'm going to go back to the charts now. So the most common question I get is, what were your key levels, right? So for last week, I only had these 3 levels, right? These are the 3 levels. So last week, so Monday, I didn't take a trade. Tuesday, I made previous shorts on, previous videos on this. So I took a trade on Wednesday, and that was our key level, which held again on Tuesday, Thursday, and then we tap into it on Friday as well. So this was my key level. So what made this a key level? Again, I've made previous videos on this, so please go and check it out. You're looking for a 15-minute fair value gap, and you're looking for absorption at every step of the way. Right, that is what you're looking for. So I'm going to very quickly break it down in this video. If we just take the ATAS platform, we break it up. Now, what makes a key level is simply a fair value gap and absorption. I know it sounds simple, but it is that simple when you break it down, right? So there was your 15-minute FVG over here. This was your key level. And so if you were to go back and study this key level, you will see a lot of aggressive buyers and no reward. Now, the same thing happened on Friday. So if we go to Friday, this was the key level. In fact, I'm going to just mark it up over here. So this was Thursday's short, Friday rejected off the same key level. So hopefully I've sold you on the idea of getting good at using fair value gaps and absorption at the same time, right? That's where the money is, right? If you know where the market wants to trade from, i.e. where does a story begin, and you understand what the main characters are doing, you can then understand the moral of the story, and that will set you up for 2026. So it's key level, entry, and then order flow, right? Simple as that. Now, when we look at this key level here, so in London, we tapped into this key level. Now, just for context, this key level over here, the numbers you're looking at is here and here. You're only interested in the footprint charts at the key level. So I'm just going to minimize this and go to the level itself. So if we go down to the 5-minute chart, this is what we're seeing. So here was the level. So we had this rejection, right? Here we have this rejection of key level. So if you're an ES futures trader, pay attention to this level. So it's 70.04 to 70.08. So it's a short level. This rejection area was super important over here. This rejection area was super important. Now, when we look at this in a little bit more detail, what we can see is 0 for 121. We see 57 for 163. So when you see these heavy blue deltas over here, right, what that means is aggressive buyers and no reward. Right, so we're seeing the rejection, a lot of aggressive buyers and no reward. This here is a key level of supply. It's that simple. Now, I had another key level over here. Now, this was the level that the trade actually played out from, right? So this is sort of step 1 of your story. Where does the story begin, right? This is where the story begins, right? This is the story start. I'm just going to write, this is the start of your story. Now, once you have where the story actually starts, what you want to understand is, again, the question I get is, how did I find this as my key level, right? Your key level for Friday should have been 69.89 to 69.83.84. The shorts came at around 69.80, roughly from here. Now, why was this a key level? So I'm just going to break this down, right? This is also a question I get a lot, right? So this here was from the 7th of January. Now, again, how did I find this? We had a 15-minute FVG over here, right? 15-minute FVG. That is step 1. You need to have a fair value gap. 15-minute fair value gap. I take the candle before. Some ICT traders, some New York session traders, some American traders will call this the order block, right? The OB. You can call it whatever you want. I use a fair value gap, and I'm simply taking the candle before the fair value gap to find my key level. Now, I don't just rely on the fair value gap, because you could argue they're everywhere. I've validated that with the order flow absorption. So here, there was a supply area because aggressive buyers failed, which means the market was showing supply, right? So this was my key level for Friday. So 69.89 to 84. So when we go back to the screen over here, when we go back to Friday's price action, this is what I was looking for. And I'm just going to break this down step by step by step. Now, this was the Friday's trade that I took, right? So we're going to get into it. Now, the market opens here, right? So this is the market opening at 9:30. So let's just play this out. So I'm going to break it down. I'm going to just sort of break down what I was going through in real time when I took this short. Now, the market opens at 9:30 Eastern. So this is the market open over here. 9:30, we open. Now, there's two things that can happen, right? Sorry, there's actually four things that can happen. Now, notice how when the market opens, I already have my key levels here. Key level 1, key level 2. So either we get to here and we break lower, or we get to here and we break higher. Those are two scenarios. Or we break here, we break lower, or we break higher. Those are the only two scenarios. Sorry, there's only four scenarios that we can actually play. We can't play any more scenarios than that. So once you have that, once I had that in place, it gives me a lot of mental clarity to understand I am not looking to take any positions here. This is all no man's land, right? I'm interested in key level 1 or key level 2. These are the only key levels I am interested in trading, nowhere else. So let's just break this down even further. So if we take this now to the natural extreme, now the second thing here is, look, we have this over here. So notice how we didn't break below our level until, what was this now? Just before 10 a.m. Eastern, right? So from about 9:30 to, let's call that 9:56, 9:57, there was no trade here, right? So if you were trying to trade here, that was a gamble, right? So if you were trying to trade to this level or trade up to that level, that was a gamble. That was a complete gamble. So if I go to the Discord now, where I share everything live on the Discord, right? One of my plays was very simple, right? I was looking for the market to kind of head lower, if that makes sense, right? So I was looking for this. So what happened is we had a break below our level, and I was looking for a retest. Now, this is the second thing that I want every trader to understand. So I get questions about this. Now, if I have a level and we break below, let's say we break below this level, right? We kind of broke below this level here. Now, I am not looking to take this short, right? I am not looking to take that short. I'm not interested. This, to me, is not a trade. I do not like to take these kind of trades, right? I'm not interested in this move. What I'm interested in is this. I am actually looking for price to do this. I want to see the market break below the zone, and I want to see the markets heading back to the zone. Now, this is where the money is actually made, right? The money isn't made in the break. It's actually made in the retest. Now, let me explain. So the story is taking place at this level. So if you've got your level wrong, then you're reading the story wrong, and everything's going to be wrong, and then you're going to blame your psychology for taking losses, when in reality you just don't know how to find key levels. So it's a big difference. But once we have this in place, notice how I'm looking for a retest, because the retest is where the money is actually made, right? So here we have our retest. Now, what's interesting here, this is where the story gets more interesting, because you want to start diving into the main characters of your story. So the main characters of this story, let's just break it down, right? There's only a couple of things that we're looking for. We're looking at buyers, we're looking at sellers, and if there's one more thing, it's actually the delta. The delta is basically telling you who is more aggressive, right? Who is putting in more effort between the buyers and the sellers. So if you're an ES trader, right, what we've had over here now is we've had a break below the zone at around just before 10 a.m. Eastern. We had our break. Notice how we're waiting for this retest, right? We are waiting for this retest. We're not looking to enter here or here or here or anywhere. What we're simply looking for is a break and retest. Now, there's a few different ways you can take this. There's a few different ways you can kind of approach the retest. I want to go over my simple way to do this. So when we have a break below, I am typically looking at the first candle outside of my zone, and I'm just going to draw a line like this. That's all I'm going to do. I'm just going to draw a line like this. Now, the reason why is because I don't consider this to be my break candle. I want to see the market fully immersed outside of the level. For me, that's a break. This is a break below my level. So notice how I'm not interested in taking this short, right? I'm not interested in taking this short. This here, I used to take a lot of these shorts. So what I'll do is I'd have my stop loss, let's say here, and I'll just get stopped out before the actual move happens, which was one of the worst things. I used to hate when that used to happen to me. So what I'm going to say is the money is in the retest. Now, that's another phrase, right? The money is in the retest. Now, obviously, you need to know which level to take the retest from, but the money fundamentally is in the retest. Right? I'm going to say that again. The money is in the retest. Now, once you've had a break, you're looking for that retest because the money is in the retest. Now, let's just play this out. Now, it's very simple. The way that I take this is very simple. When we have our retest, and I put this in the Discord as well for traders to understand. When we have our retest, right, what's interesting here is we can either have a break above the zone or we can have a break below the zone. It's that simple. Break above or break below. That's the moral of the story. Now, if we get the moral of the story right, we can then be on the right side of that story and hence make money. Now, how do you know what the moral of that story is? How did I know to take this short, right? I took this short. How did I know to take this short? So my execution for that day was roughly here. So 69.82, right? 69.82. That was my entry. That was my exact entry. So it was around this red line over here, 69.82. And I had my stops just above this area over here. And of course, I was targeting the level down here. So that was a 1 to 3 risk reward. So awesome trade. Awesome trade. Now the question is, what gave me the confidence to go short over here? Right? What was my confirmation? Right? So I often talk about the story of the market. Now from around 10 a.m. Eastern to probably around 10:15, 10:20, the market was telling us a very interesting story in this region. Right? So this is a blue region over here. This blue region, super important. Now I'm going to hopefully in the next 5 to 7 minutes answer every single person's questions because I get so many questions and I want to just address them all in this video. So the first thing is my entry is going to come here, right? So let me just draw this out. So if this is a candle that broke, this is where my entry is going to be. It's not going to be here. 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 No. For me, I'm a little bit more conservative with my entries. I want them here. So I'm looking for a break, a retest. I'm looking for the retest and then I go short at this point. Right? Very simple. In fact, I'm going to break that down so that people can understand it in a little bit more sort of detail. So this is the break over here. This is the break. So not this candle, but this candle. This is going to be my break. So I make a note of this candle's low over here, right? That is what I'm looking for. Assuming you've got your key level right, because if you don't have your key level right, it's all for nothing. So you've got to have your key level right. But once we have that, right, I'm looking for the market to re-enter my zone and I'm looking to go long or short, right? It's very simple. Now, for me to go short, we have to come below this line. But before we break that down, before I go into that, I want traders to understand what was going on. So this is 10:06, 10:07, 8, 9, 10, 11, 12, 1. 13. So this is around sort of, let's say 7 to 8 minutes. 7 to 8 minutes of action. Now, I spoke about the story, right? So let's go back to our story because the story is very important. So the story is as follows, right? You need to have a beginning. So you need to have that key level. That is the beginning. That's the start of your story. Now, the next thing is your main characters. Let's just write that down. Main characters. What are the main characters of your story? So the main characters of your story, very, very simple. You have buyers, right? And you have sellers. Those are the only two things that you need in the market. Now, the third thing is the delta, which you're going to go through right now. What are the main characters of your story? So let's really start to break this down. So I've got the ATAS platform. Again, this is my preferred platform for order flow. It is the best platform for order flow, in my opinion. ATAS or Sierra charts or even deep charts these days, you can use anything. So notice how this short from this key level, 69.84 down to about 69.62. So we want to break down this entire short trade over here, this entire short trade. Now, what were those main characters doing, right? These main characters are what sold me on the story. So think about when you're reading a story, there's a few main characters that dictate the overall direction, the ending, and therefore the moral of the story. So everything, the market is telling you a story. You need to be able to read that story. And the only way you can read that story and most importantly, understand that story is if you can understand the main characters of that story. So this is how we do it. So we want to look at the candles as we're entering the zone. So let's take this candle by candle. So first we have our official entry into the zone at at 10:06, right? So at 10:06, we have our entry. Let's just mark that here. So there we have 10:06. So 10:06 we enter the zone. What was interesting about this candle? Let's break this candle down. So this is a candlestick chart and this is a footprint chart, right? Very simple. So this is our footprint chart over here. So what we can see here is we're not going to dive into the numbers because I've made a lot of videos on the numbers, but we just want to focus on the color of the delta. So the delta is the difference between the aggressive buyers and sellers, right? So when we have a positive delta, we have a blue rectangle. So 39 for 257. The delta here is roughly 210, whatever it is, right? Even here, 423 for 187. The delta is about effort, right? So what are the main characters doing? So the main characters here, what's basically happening here is we have a lot of buyers, right? And there's a lot of buyers and there's more actual aggressive buyers and aggressive sellers. Now notice how I'm using the word aggressive. There are a lot more aggressive buy orders hitting the ask than aggressive sell orders hitting the bid. Now we have that as a theme, right? That is the theme. So the main characters here are basically telling you a story. And the story is very simple to understand. These are the main characters of your story. A lot of aggressive buyers, a lot of aggressive buyers. Now what's interesting here, if we take a look at this red candle, this bearish candle, yes, it's a bearish candle. Yes, it's a red candle. But what was at the top of this candle, right? This is what you want to train your eye to see. The delta is by far the most powerful concept once you have your key level correct. So if you're a New York session trader or a London session trader, and you're using fair value gaps or any other ICT concept, I want you to take that knowledge and combine it with the order flow. Because when you combine it with the order flow, you can actually start to, number one, read what matters, and number two, actually understand the story at your zone, whatever you're trading, right? That's why I'm trying to sell you an order flow, because order flow can take whatever you're doing and it can add the knowledge of the main characters to give you the moral of the story, which is ultimately what you want to do. So 2 for 131. What does that mean? Well, the delta there is 129 aggressive. Well, the difference between the aggressive buyers and sellers, 129. Massive positive delta means there's lots of effort. There's lots of effort, right? There's more buying effort in this region. But look what we end up having. Not only do we break below the zone, we actually break below our initial break line over here, right? So the question I have for you is, were these buyers successful? It's that simple, right? Were these buyers at 10:06, 10:07, 10:08, 10:09, 10:10? We had these buyers over here. Even here, we had 0 for 90, right? I've made lots of videos on this. Finished auction. Think about what that means from a buying and selling perspective. What does 0 for 90 actually mean? Well, 0 aggressive sellers, and there's 90 aggressive buyers. That's in this region here. This region, and then this region, right? So were these buyers actually successful? These aggressive buy orders, even the row underneath, 175 for 325, right? That's a huge positive delta, hence why it's highlighted in blue. Now, the advantage of using the ATAS or general footprint charts, delta footprint charts, is it shows you the delta outliers, right? So these kind of dark blue boxes here, dark blue, dark blue, dark blue, these are delta outliers, which simply represent a large difference between the aggressive buyers and sellers. So this is the market trying to tell you a story. It's trying to tell you buyers are putting in effort. What are the main characters doing? Well, more buyers, more aggressive buyers, more aggressive buyers, more aggressive buyers, but we break below the zone. So the question is, what was going on at this zone? Or in other words, what was the moral of that story? Well, the moral of the story was very simple. The aggressive buyers failed. I'm just going to write here, AGG. The aggressive buyers failed. Now, when the aggressive buyers fail, that means that sellers are in control. And that is the moral of the story. Right? So I just want to answer everyone's questions because I'm thinking of people in my head as I answer these questions. So the thing is, you know, if you have all these buyers here, right, and all these buyers, and we break below the zone, right? We break below this zone here, right? Were these buyers successful? Were these aggressive buyers actually successful? Look at the bid, look at the ask, look at the delta, and ask yourself, were these buyers successful? Oh, let me move that. Were these buyers successful? Well, the answer is no. The answer is no, right? Boom. So there's where the short came. So my shorts were at 82, right? 69, 82. So roughly here. I had my stops just to be safe. I'm not so tight with my stops. I'll have my stops up here. And I will look to target the next key level, right? That simple. I'll just look to target the next key level, right? So if I just break this down, There we go. There's our tab. There we go. There was the trade. Now, I just want to answer a few more questions. If you missed the first entry, right? So if you missed this entry, which I took, the market won't always do this, but the market will give you a re-entry, right? The market will give you a re-entry. Now, let's just break down that re-entry. So I entered short at probably around 15 past 10, 10:15 Eastern. So I was in profit. And then, of course, I went into a small drawdown. Right, I went into a small drawdown. So there was the drawdown here. So if I break that down, drawdown, and then more drawdown, and then boom, big, aggressive, red candle. Now, this is a really interesting lesson, right? This is a really interesting lesson. Now, for me, I have a rule where if I get to more than about 50% of my SL target, so this is my SL. So my entry was at 82, right? And my stops were at 89. So that's about a 7-point risk. I'm risking about 7 points. Now, if we get to about 3.5 to, let's say, 4, so 86, I was willing to close the trade here. Now, we came close. We did come close. So it's a bit like, well, what do? I was willing to basically read the order flow. This is what kept me in the trade. So I want to break down what was going on at 23 and 24 past 10. Now, let's break this down one more time. So this huge kind of big sell-off candle came from this region, right? So let's break this down again. So again, footprint charts, we had our first sell-off. Now we have our second sell-off. Now the second sell-off came after a bigger absorption. So I had a question from someone recently saying, I think the question was, what type of absorption do you look at? Or, how big is the absorption, or something like that. Now, that you're thinking about it in the wrong framework. Whoever asked me that question, you're thinking about it from the wrong framework, because what you want to focus on is the delta and the delta outliers. That will give you your indication at key levels as to whether the market wants to go long or the market wants to go short. Now, another answer to that is we don't actually know what the market's going to do. We can only understand where the key level is, read the main buyers and sellers, and then understand how the market works, right? Absorption of aggressive buyers results in a short. Now, we have no way of knowing whether we're going to be 100% correct because we're operating in probabilities, not certainties, right? The order flow may look like it will give you a certain edge. It will definitely give you a valid edge. It will definitely give you an edge that's actually valid, that you can take to the charts and be repeatable, be consistent, and hopefully understand what you're doing. That being said, we're still dealing in probabilities, not certainties. Now, once you have that, just wanted to get that out of the way, but once you have that in place, this here was a massive absorption. So 23 and then 24 past 10. This candle here was huge. So again, 0 for 45, finished auction, which means the buyers and the sellers weren't really interested in trading at that price. So this was 69.85. 69.85, we had a huge drop back in profit. Now, what was interesting here, 282 for 544, 294 for 759. Now, once again, a massive amount of aggressive buying, but no reward. Right? Because we had this huge sell-off. So this is a classic example of absorption. You don't even need to read the numbers. Look at how dark the blue is, right? Look at how dark that blue is versus, you can't see it on the footprint charts, but look at how dark this blue is, and we significantly drop, right? This drop here, we significantly drop. Now, this here indicates that aggressive buyers failed. So going back to our story arc, let's break this down. So we have a key level, right? That's the beginning of our story. Right? The next thing is we have the main characters, right? What are the main characters telling us? Well, the main characters are telling us that there's lots of aggressive buyers, but no reward, right? Lots of aggressive buyers, but they're struggling to break above that level. So the moral of the story is nice and simple. The moral is that sellers are in control. Sellers in control. Simple as that. That's it. That's it. That is the whole story arc to my trading. I know I've been talking a lot, but that is basically how I took this short, right? So again, breaking it down from an execution standpoint. So from an execution standpoint, my entry was here again. So made about just over $1,000 for the day. So here was my execution. So risking about $300 to make I moved my TP down to the level. So risking about 300 to make 1,000. So it's about a 3-to-1 risk reward. Right, that's about a 3-to-1 risk reward, making about 1,000 or just over 1,000 USD on the trade. Now, yeah, so that's kind of all I wanted to go through, just going through the trade basically from Friday. And yeah, so that's all I wanted to go through. So if you have any questions about, anything I've been through, just drop in the comments. I'll be more than happy to get back to you.